Hello everyone. Today I will discuss about IAS 29, which is financial reporting in hyperinflationary economics. So today we will discuss the objective of IAS 29, the scope of IAS 29, and some indicators of a hyperinflationary economy, the restatement of financial statements, some disclosures, hyperinflationary economies countries, and last some question answer and case study to understand this IAS and its application. So first, what is the objective of IAS 29? The objective of IAS 29 is to ensure that financial statements prepared in hyperinflationary economies are expressed in terms of the measuring unit current at the reporting date, thereby maintaining their relevance. The scope of this objective is 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 to apply to the financial statements of entities in economies classified as hyperinflationary, and all entities operating in these economies regardless of industry must apply IS 29. So now we should indicate some particular indicators of hyperinflationary economies so that we can understand how in hyperinflationary IAS 29 is applied. So IAS 29 does not define hyperinflation but provides a guidelines to identify it. There are some characteristics, common characteristics. One is general population prepares to keep wealth in non-monetary assets or stable foreign currency. So there has mandatory to one stable foreign currency, and they prepare to keep wealth in non-monetary asset rather than others. Prices are linked to a price index, and such indexation is widespread. It means that they should use a price index to restate it, and the indexation system is also widely acceptable. And the inflation rates are extremely high, with cumulative rates approaching or exceeding 100% over 3 years. It means that the last 3 years total inflation rate is near about 100% or more. In that time we can say it's a hyperinflationary economy. Say for example, if last 1 year 2020 the inflation rate is 35%, 2021 the inflation rate is 36%, and 2022 the inflation rate is 40%. So this 3-year cumulative inflation rate is more than 100%. So in that case, in 2023 we can say that this is a hyperinflationary economy. So in that case, in that time we can apply IAS 29. So IAS 29 basically applied to restate the financial statements. Normally the financial statement we restate on non-monetary items to adjust for changes in the general price index to reflect current purchasing power. But some monetary items which has a nominal value, so in that time we don't adjust it because it's already reflected nominal monetary value, therefore we don't adjust it. Say for example, if an organization has accounts payable 1 million, so in the time the hyperinflationary economy, so subsidiary has 1 crore or 1 million payable. So if the economy faces last 3 years more than 100% inflation, but their payable will not increase because they obligate to pay only 1 million amount. So therefore the monetary items since it reflect the nominal monetary value, and it is does not required to adjust. Some income and expenses must also be restated for the effects of inflation using the price index, and the presentation of comparative information we must be restated in the same terms of measuring unit at the end of current reporting period, so that it will be better for us to compare with before and current. And use a general price index. To restate requires the use of a reliable general price index reflecting the changes in purchasing power. So some disclosures are required to disclose when IAS 29 is applied. The fact that IAS 29 has been applied, it should be disclosed in the financial statements notes. The identity and level of the price index at the beginning and end of the reporting period, and the impact of the restatement on the financial statements also should be disclosed in the disclosure of notes. So for example, the restatement on financial statements before restatement and after restatement, what will impact on financial reporting and its profitability, and so this is must disclosed in the notes, so that the user of this financial information, they can easily understand to take decision based on this financial information. There are some countries who face already hyperinflationary economies. So these are some examples are Argentina, Ethiopia, Ghana, Haiti, Iran, Lebanon, Sierra Leone, Sudan, Suriname, Turkey, Venezuela, and Zimbabwe. And some countries with projected 3-year cumulative inflation rates exceeding 100% are Egypt, Laos, Malawi, South Sudan. And this source is from International Practices Task Force IPT app. Okay, some question to understand this. First one is, should an entity apply IAS 29 if the country is not officially hyperinflationary? But IAS 29 especially applies when an economy is officially considered hyperinflationary, with inflation exceeding 100% over 3 years. If the inflation rate is higher but does not meet the threshold for hyperinflation, IAS 29 is not applicable. However, entities may still need to apply the other standards to account for the impact of inflation in such economies, such as adjusting for price level changes in a more limited scope. So that's all about from me today. Thank you for watching this.